This is Alan Farley from FX Empire. Intel is trading at a 52-week high this morning after raising first quarter guidance and announcing a $20 billion investment in two new fab facilities. The best way to view this stock is on the long-term chart because we're still in all of that resistance created by the big bubble that ended in 2000. You take that massive uptrend and the massive downtrend that followed and stretch a Fibonacci line across it, and it pretty much details Intel's actions for the last 2 decades. First, in the last decade, around 2015, it came up to the 382 resistance level and tested that level in 2017 and broke out, just mounting the 618 level. Well, that didn't work. It pulled back and traded at that through that level several times before this breakout in 2019 that brought it up to the 786 level. Now see what's happened to the 786 level since February 2020. We have the bounce to the summer rally, and then now we have Intel back up in the same sort of range, which is resistance between 62 and this prior high at 69. So there's a lot of congestion right near. And when it finally clears it, then we could finally set the stage for Intel to come back to its prior high. Another problem with this chart is this the lows in between these peaks. You can see this really shallow rising trend line. That means each one of these dips is getting deeper and deeper and deeper, and it's taking out the sentiment of bullish Intel shareholders, because first they're at a profit, and then they're at a loss, and then they're at a profit, and then they're at a loss. So it's a very unstable expanding wedge pattern. Now, the prognosis is probably pretty good because there's a lot of money sloshing around the market. But again, this is resistance, so you have to be really hesitant about buying Intel up here because I fully expect that resistance to kick in and slow down this upward advance.